The Fed made an announcement of a rate hike of 25 basis points. We're here to discuss on Today in Mortgages. Hey, what's up, Dream Makers? Welcome back to Today in Mortgages. I have Rich here with me, and I'm not even going to bother with quick introductions because we have a rate hike that we want to talk about today. So this is something that we talked about on Tuesday's episode, and it's not a big surprise, but of course, markets go haywire anytime the Fed comes out. So Rich, first, tell us a little bit about what happened today with the Fed.
Well, actually, you say it's not a big surprise, but it actually was a little bit of a surprise because the market had been prepared for 50 basis points.
Sure.
The fact that we had the fallout with Silicon Valley Bank and others, it put a little tension in the market, and I think that told the Fed basically back off. Let's worry. Right now credit's tightening everywhere for every lender in every capacity. I'm talking about home loans and credit cards and all of that stuff. So he believes that will also slow the economy. So I believe Fed Chair Powell, well, he said this, he believes that that's going to help fix the inflation also, but he wanted to give confidence in the market and guarantees deposits at SBV or Silicon Valley Bank, and just to kind of bring some confidence into the banking world, because the last thing we need to do is lose confidence right now in our financial institutions. That'd be terrible. So that was a surprise. And more is that they're talking about this might be it. Maybe we're done. So we'll see. I mean, we can assume there'll be another 25 basis points. They did talk about that, but considering we're working on lag indicators, we might see a report or two in the next few weeks that may change that entirely. We might be stuck here at 550 basis points Fed fund rate.
Yeah, thanks for saying that, Rich. I think it's important to note what the Fed said and what we can expect in the future. I did read something from the New York Times. As far as interest rates in the future, this is just a forecast, but it says they're forecast to raising interest rates to 5.1% by the end of 2023, before coming down to 4.3% by the end of 2024. So that just gives a roadmap, and it's kind of something that was in general trend, what we had heard before. But yeah, I think 2 weeks ago we wouldn't have predicted, but 2 days ago, analysts were maybe pointing towards this 25 basis point hike. So I think looking at what happened today and those words from you, Rich, really is kind of one of those things where there's a lot of negative indicators, a lot of positive indicators out there in the economy, and they're just pushing and pulling, especially when it comes to the mortgage and the real estate market. But we did get some good news this week. You mentioned it on one of your clips that the February new home sales numbers came out, and there was a positive trend, right, Rich?
14.5% up. So that's great news. I think the scare of the interest rates and the volatility kind of put people on the fence and maybe on the sidelines, but people still want to buy homes. We've mentioned this over and over. They're going to buy the homes. It's just inventory. And if the sellers feel confident they can sell their home, then they're going to put them on the market. So I think we're just at the beginning. Plus, we're in the spring buying season. We're just starting it off, and people are getting antsy to get out there and get after it and find themselves a property. And that's just what we're seeing. Apps were up last month. They're up already through March. So there's a lot of activity happening in the mortgage industry right now.
Definitely. And I think that you have a message about confidence that you've been sharing in our company. So what are you saying about confidence right now, Rich?
I think there's a giant vacuum of confidence. All this uncertainty and everything that we're experiencing over the last 9-10 months has got a lot of originators. They're just not very confident right now. They don't know how to advise their clients. But I can tell you that confidence it's 99% of our business, right? Everybody wants your realtor wants you to be confident that you're going to close that transaction. Your borrower wants to know you're confident that you have pre-qualified them. And if they feel that you're not confident that you're going to be able to close this transaction and provide the best possible experience, they will feel it, and you will lose that transaction to somebody that is confident. So what I would do is continue to educate yourself on what's happening in the market right now so that you can confidently coach your clients and your referral partners on why this is a good time to buy. Never mind the noise. Work through that, but you have to feel confident that it is in fact the right time to buy, and you need to have some credibility behind your statements. Do the research, read the articles, understand what's happening, and share that with your client. Because when you're pitching a 7% interest rate, after hearing 2 straight years of 2.5% to 3% interest rate, your client is not going to believe you. That's just facts. And you have to be confident in delivering. Yes, I understand it's higher than you expected and why. And you have to educate them about what's happening in the market, and then talk about you're not buying an interest rate, you're buying a home. And let's get you qualified on the best possible program with maybe a buy down or a step up payment, and give you the ability to refinance out of this higher rate today that you're getting today into a lower rate once the market starts to adjust back down.
It's really good, Rich. I like to say that confidence comes from competence. And so I think what you're saying there is you just got to be competent. And the best way to be competent is to educate yourself, like you just said, but also to have a great team behind you. So if you like what Rich is saying and you are interested in knowing more about what we do here at Network Funding, you can check us out in the Grow link below. I also want to make you guys aware of some other confidence building materials that we have, and that's getting your face out in front of your people in good marketing. We put together a free resource called 5 Marketing Musts, and it's 5 tips on how you can get ahead while the market is down. You can find that at todayandmortgages.com/marketing. Again, that's todayandmortgages.com/marketing. Go out, get that free resource, and start winning in your marketing. Before we sign off, Rich, is there anything else you want to say on today's rate hike from the Fed?
Hey, man, overall, it's a good thing. We got less than what the market expected, and we've got some commentary from Fed Chair Powell that they're going to keep evaluating this, and maybe we might not see more, hikes in the future. We'll see.
All right, we can only hope. Thanks again so much for tuning in today, guys. Like it, share it, tell your friends about the podcast. We really love to get in front of more people, and you can help us get there. So thank you so much. We will see you next time on Today and Mortgages. Today in Mortgages is produced by Network Funding LP, which is an equal housing lender, NMLS 2297. The content of this program is meant to be a commentary on mortgage and real estate news, and any discussion of rates and or products should not be taken as an individual mortgage or home buying advice or pricing estimates. And any commentary on this show should not be considered a promise to make a loan. All applicants for a loan must qualify, and you should consult a professional regarding your individual loan scenarios for your financial situation. Visit our website at nflp.com/licenses for all state licensing and other legal information.